All right. Welcome to Distress Deals Decoded, where real estate problems read real solutions brought to you by our friends at Asset Resolution Advisors. Today, we're going to be talking about the trend that agents and investors across the country are starting to feel in real time. Buyers are hesitating, contracts are falling apart, home sales are down 8.4%. And at the same time, default rates are climbing to 4.6%, the highest level it's been since the Great Recession. So what we're going to do is we're going to show you what's really happening behind the scenes, and most importantly, what does this mean for the next wave of distressed opportunities? So we're joined by our amazing co-hosts, Steve Schiller and Patrick Butler, bringing you the real deal, how to decode these deals, and what is actually going on in this market. What is the market reality? So we're going to go through the market reality checklist here. Patrick, talk to me, man. Like, what's going on behind the scenes over here with these defaults?
Yeah, so if this curtain behind me wasn't a fake background, I'd pull it and show you guys what's going on. But there's a lot going on. And today's topic is actually two combined into one. It's the buyer default rate that's escalating as well as the seller default rate that's escalating.
Mm.
But the two are joining forces here. So from the real estate broker and agent perspective, there's a lot going on. So we all are hearing what's happening in the marketplace. Interest rates are still high, but they might be coming down. Prices are softening, but crap, I'm already in contract at yesterday's prices. So what should I do? And one of the things that we see here at Asset Resolution Advisors is many of the contracts, especially in our space, come in with very low earnest money deposits, right? Because a short sale, people don't want to tie up a lot of money for a long period of time. And we're kind of okay with that in our space because it's very specialized. But if you're just a regular homeowner and a real estate agent brings in an offer at $1,000 earnest money and no additional deposits, that buyer does not have a lot of incentive to stick with the deal unless it's a great deal. So it stands to reason now. You've got a buyer that's in a neighborhood, they paid $500,000 for a property, and they see two more coming on MLS at 480, 475. I got $1,000 in EMD. I can save $25,000 if I bail out of this contract. I'm out of here. And we're seeing a lot of that happening. Buyers are backing out of hopes that they will get a better deal. So that's one piece. Deals are dying during the inspection and financing period. So once again, depending on the market that you guys are in, if you're in a high loan to value marketplace, FHA, VA, government loans, and 6 months ago prices are here, and now we're seeing today's prices dropping, that property may not appraise, and you may not be able to get the mortgage. Therefore, you might want the property, but you can't get it. So that's a second reason why deals are dying on the buy side. Rate shocks are hitting buyers as well, right? So as the process is going on, they start seeing what their monthly is going to be. There's a lot of cold feet and all that stuff. So there's a million things happening. And then the sellers, of course, are emotionally tied to these transactions. And there's nothing worse if you're a home seller and you've made plans to buy your next home and your buyer backs out at the last minute or midstream, well, now you've got some stress on your hands. And for a lot of these sellers, the reason why they were selling is because they were in financial distress, because the default rate is rising rapidly to the tune of 4.6%. So we're seeing a lot more contracts falling apart midterm. Again, not in our space, folks. If you're doing short sales, we like to keep these things tight through good communication. But some buyers are getting all the way to the 5 yard line and they're walking away from these deals. So that's where the buyer default is starting to put the seller default on. And to close this segment out, if you were around this real estate business back in 2008, that was a really big deal. Appraisals all of a sudden were not hitting the mark, and a lot of buyers that were buying these properties from investors who were flippers and buying, they couldn't close the deals, and the inventory came rushing back onto the market, which swung that pendulum back over to a full-fledged buyer's market almost instantaneously. So we're kind of getting to that point right now. So when contracts start failing at scale, it doesn't just affect us in the business, it creates financial strain that can lead to a lot of issues such as missed payments and eventually financial distress. Back to you in the studio.
Yeah, so then Steve, talk to us. I mean, well, so then why are buyers ghosting on these deals?
So from the servicer side, there's a lot of things going on, right? Which I think leads to what's going on in the marketplace.
Mhm.
In the servicer world, one of the things we're seeing an increase, as Patrick said, of the default rate. It's at 4.6%, one of the highest default rates we've seen in years. What's going on with that? Well, we should also see a huge increase in bankruptcies, a huge increase in foreclosures, huge increase in all the distressed parts of the industry, and we're not. And there's a reason behind it. One of the reasons behind what's going on is servicers are not staffed properly to handle all the volume, which means that the process of getting everything through foreclosure, through bankruptcy, through whatever is just really, really slow. We see it even on the short sale side that it's slow. So what does that mean? Well, it means people who thought they had to sell, right? These are their personal loans. One of the things we've talked about over the last few weeks is, back in the Great Recession, there were a lot of investment properties. These are these people's own personal properties, their own loans. They're trying to help save what's going on, right? There are a lot of things going on with them. Loss of job, loss of income, loss of whatever, high interest rates when they bought the house. Now there's low interest rates. They can't refinance it. There are a lot of shock elements into the ecosystem going on. And so what's happening is people are saying, "Oh, I'm going to sell. No, I'm not going to sell. Why?
Mm.
Well, I thought I was going through foreclosure, but I'm not going through foreclosure." So all of these things are going to churn, and it's going to happen. I think it's going to eventually get there, but we're going to see the uncertainty, right? A lot of it's just because of there isn't movement on the servicer side. So people have sellers particularly, there's they don't want to sell or they don't need to sell. Buyers don't need to buy, right? What's that causing
Mm.
buyers to walk away. Insurance and tax rates, we hear a lot about that, especially in flood zones. Those are going up, right? Florida has a particular issue with condos, with all the assessments. California does too. These are things that are going on that people are like, I don't want to pay, so nobody's paying, right? Yeah, rates are coming down. Underwriting's still pretty hard because they don't want this to happen. So there, people loss of jobs, so debt. There's just so many factors, economic, operational, that are going on, that this uncertainty is really what we're seeing. So, what does this all mean? At the end of the day, the defaults, just because they're defaults, doesn't just mean that those are missed payments. It means there's financial stress in the
Mm.
marketplace. And so that's why we're seeing all of these issues coming to fruition, and why there's so much uncertainty with buyers and sellers.
Yeah, and that's all happening at once, which is
Yeah.
Yes.
which is wild, right? Like the timing is aligning with defaults and all of these things, as job losses, tightening up the underwriting, insurance, and tax. Like these are things that people didn't even really account for, and it's all hitting at one point. But this is on the investor side, real estate investors. Hey, it creates a lot of opportunity, and I hate to say it that way, but it does, right? This is just the way of nature for when it comes to capitalism and what we do, right?
True.
Uh, a lot of failed closings create motivated, right? Because there are people, yes, that may be like on the fence: do I sell? Do I not sell? But a lot of these folks, they have to sell, right?
Right.
They can't afford. They may need a relocation. There's a lot of people unfortunately going through a lot of health issues. They got to move in with family. They're going into God forbid, hospice or long-term care. There's so many motivating factors as to why people need to sell, and also the ones that want to sell. So it kind of creates this spiral effect, right? Where like you'll have a neighborhood, and if your neighbor has a dire need to sell that property, and they sell it for under market value, well, that's the new comp, right? So
Right.
from an investor standpoint, hey, I'm gonna wait it out. I'm gonna hang out until I can find the right motivating situation because my number one job as an investor is to buy right. Investors only make money when they purchase properties at the right price. They do not make money when they sell property, right? That's like a golden rule for, money when you purchase, not when you sell. We're right at that sweet spot of traditional default, buyers. Usually that happens within the first 2 to 4 years, which is, a normal default, and we're right there. This is pretty much the years of, when that hits. The adjustable rates are starting to reset as well. There are people that originated a lot of these loans in 2022 on ARM, and now those things are resetting, right? So now the rate adjustments go up, and people cannot afford those mortgages. People are going to go into default. Those are opportunities for, short sales, pre-foreclosure deals, et cetera, bankruptcy deals, things of that nature. Sellers are stuck right now in most cases with two mortgages. Some of it is some of them don't even know they have two mortgages because some of the forbearances, they tack that on as an additional mortgage, right? They thought they were getting a break, and that's going to be put on the back end whenever the loan is due to close out, or whenever you sell the property. But that's not the way that works. There's a lot of vacant properties that they left behind because they had to move, right? They had to go. They're moving in. They're going to an ALF, and so they're sitting vacant, which means that there's deferred maintenance, right? A home without people, you should see how fast that stuff starts to deteriorate. And so those are good opportunities for investors to kind of capitalize on those opportunities for, their investment strategies. And then unexpected carrying costs, right? You still have to pay the light bill, you still have to pay the water bill, you still have to cover the grass, the pool, right? God forbid, you go through a storm and now you got to do your roof or your windows. It's unexpected, right? So investors start to see this, and more as that continues to happen, and of course everything's slowing down. You got more and more price reductions. So I would sit on the sideline as an investor, just kind of monitoring. A deal goes in the market. I'm trying to check, okay, typically by day 45, day 60, day 90, these prices are coming down. They're coming down. It's coming down. So maybe on that 90 to 120th day, that's when I'm going to go ahead and make my offer on even that reduced price. They reduce the price by like $50,000, which we see all the time. I'm gonna go in there now with a price at 80,000 below that list price, right? That the original list price. Which again, all of these things create a lot of more urgency and or opportunities for creative deals. Obviously, we've seen a lot of the investors doing more sub two deals, right? Buying properties was subject to an existing mortgage, locking in those lower rates and being able to take on the responsibility of carrying the house in a more creative manner, right? And so for the investors, that's what we're seeing. That's the leverage when it comes to this timing in the market. So those investors that are patient can spot those opportunity, then that's where you capitalize, right? And unfortunately, I hate to use it that way, but again, like I mentioned earlier, that's how everything shifts, and you're able to capitalize. It's just the nature of the business, right?
Mhm.
So, Steve, back to you, my friend. Talk to me about, how do we connect all of these behaviors, the outcome, the opportunity? What does that sequence look like?
So the thing about this is there are a lot of things we don't know. I'm not going to talk about that. I'm going to talk about what I do know. So what I do know is we're now at over 1 million properties that are upside down, right? That have
Mm,
no equity, which is growing daily. That doesn't account for all the other financial issues people have that they're upside down, but it doesn't look like it on the analytics that we see, right? That's just on the first mortgage. Doesn't account for partial claims, the whatever else is out there, junior liens. So that's growing. We also know that we've had the most amount of properties ever removed from the MLS that we've ever seen, right? So what is all this telling us? How do we get all this, right? So buyers are ghosting. We know that. Sellers are trying to relist and they can't get the property value. There are a lot of things going on with that, right? Months are going by. They don't know what to do. They're doing everything they can to pay, void foreclosure, to avoid bankruptcy when it's going through there. It's just a lot of distress, right? There's just defaults going up. There's nothing moving in the market. How does that become a solution? Well, first of all, one of the things we've always said to consumers out there, to investors, to everybody to understand, the sooner you deal with the problem, the better off you are. There are too many deals we've seen over the years. Hey, my foreclosure's next week. Can you help me? No, it's too late, right? It's just if you try to do something at the end, it's way too late. This is exactly where asset resolution, this is where we step in, right? Before the foreclosure happens, before the foreclosure starts. There are ways to talk to the homeowners to get them to see that now is better than later. There are problems that they need solved that they don't know how to solve that we know how to solve from a financial standpoint of the property with the default. Education is so important to the homeowners to understand because there's so many things that one of the things I hear so often, it's like, I don't want to do a short sale because there's a deficiency. I'm just going to let it go to foreclosure. Who cares? Guess what the foreclosure is going to do?
Yes.
It's going to create a deficiency, the same exact deficiency that is going to happen with a short sale. So, those deficiencies are IRS driven based on what was forgiven. It has no bearing on whether it was forgiven by short sale, a deed in lieu, a foreclosure. It's forgiven. Period. End of story. For my 2 cents, what I tell everybody is, would you rather control what is forgiven versus just letting the banks handle it? Because you don't know what they're going to do. So that's where short sales in particular, but even just regular sales, that's where they come into play. Is when you have all your options, you're far better off in managing all the other items downstream than when you don't have options. So that's one of the things we really, from a facilitation standpoint with real estate investors, real estate agents, that we really urge is talk to the people, talk to the homeowners, talk to the sellers, explain that they have many more options today than they might downstream. I think that's the key. I think that's the key to this opportunity right now.
Yep.
Okay. So I mean, the earlier we can get to the solution, the better it is for the consumer seller in these type of situations. Guys, if you're leaving things to the last minute, a lot of times these servicers don't really have a lot of mercy, and you don't have a lot of options, or it's going to cost you, I don't know, 3, 4 times more by waiting than actually taking out action. Of course, contacting the right people would definitely help. So, Patrick, what should agents be watching out for in this
Yeah.
segment?
So interesting. We were just on a call with one of our community members before
Mm-hmm.
this podcast, and he's got a couple of cool things going on. One of them, he has a real estate agent that's working on his behalf to source properties. And it was interesting because we kind of had to go through this conversation a few times to really etch it in stone. But the agent is finding properties on the market that are listed by other real estate agents that are on the market for extended periods of time. And we're seeing more and more of that. Now, in this particular conversation, the agent was bringing them back to him as an investor, which nice thought, but those short sales don't necessarily make great investor opportunities. So
Right.
we'll come back to the investor side of this, but they do make great agent opportunities unless they're already listed by other real estate agents. So good concept, but a little bit off base there. However, That same agent is a great bird dog and he's willing to make the contact. So what that guy needs to do is shift his gears. And what real estate agents really should be doing right this minute, especially if you're in default real estate,
Mhm.
is refine your avatar. Who is the potential customer we're looking at right now? Properties that have been sitting on the market for a long time, almost always, either it's a crazy seller or the agent and the seller did the math and figured out how much do I have to list this property for to pay off all the debt so that I don't have a deficiency, so that I don't have to bring cash to the table. And unfortunately, these properties sit on the market for long periods of time. That doesn't do anybody any good because the seller's continuing to make payments, continuing to
Mhm.
maintain the property. And if they have to move, as you mentioned, Juan, if they've got a relocation coming up or there's been a job loss or health issue that they have to sell, longer is not necessarily better.
Right.
So that's one thing to look for. Canceled contracts, another great thing to look for. I will tell you what, I've been in this business a long time. Sometimes the homeowner holds the listing agent personally responsible for a buyer backing out on a
Mm.
transaction. And they will sometimes cancel the listing on top of the purchase contract. So take a look at those. When you're going through your MLS, look for expired listings. This is old school, folks. Look for canceled contracts because those could be some of your fastest opportunities to new listings for yourself. Understand that the sellers are going to need to be more flexible, but this is a great opportunity to have that conversation with them. The other avatar would be those people that closed 2 to 3 years ago that Juan mentioned. They got into the market when it was still peaked. If they had a high loan to value mortgage, they're now upside down. And if they're in default, well, there's a great opportunity to list. So all of these things, when you start combining them, raises the flags as to which these deals are that you want to start looking for. And understanding that as price reductions continue to happen, more and more sellers are going to end up being over encumbered and will have to do a short sale. So, real estate agents, this is the time, get your short sale act together. We at
Mhm.
Asset Resolution Advisors are here to teach you that. We've got a community where we can talk with like-minded folks as well as ourselves and really own that space. It's important for you for the next few years. And what we have definitely found for many of our investors, and that same model I just talked about, where the agent's bringing in tons of deals that may not make sense for the investor, one out of every so many of them are the golden nuggets. They've got something in there, whether it's a surplus on HOA, whether it's a mortgage that was wiped out, or some additional hidden equity that does become an opportunity. So do the homework. Go through all of your systems and make sure that your processes are in place so you can identify these things. That's what the agent should be doing. Listings are an opportunity today. And the banks, by the way, currently are still paying the highest commissions in the marketplace. They're paying 6% still. And I know we can't
Mhm.
talk price fixing or any of that, which I'm not, but that's the best commissions you're going to find in town when everybody else is discounting commissions after this great lawsuit that we experienced last year. Juan?
Yeah, and on the investor side, a lot of what you mentioned also applies, right? From the realtor to the investor. Failed listings. That's an opportunity to reach out directly to a lot of these homeowners. Again, just because they hired a listing agent to list the property, like Patrick said, either they're crazy, crazy seller, or the realtor has intention of selling the property where the seller did not have to come to the table with money, right? Or upside down on the deal. Sometimes that's not 100% avoidable, but from an investor standpoint, you are able to come in there with a lot more creative options to buy that said property, right? And then you want to look for extended days on market, right? So same concept before the failure of the listing. It's more so, okay, is there an opportunity to really negotiate these deals because it's just been sitting there? And again, like I had mentioned earlier, you have a lot of, homeowners have a lot of carrying costs when they're, typically on a standard home to carry out a property, you're about 4 grand a month on average, right? So here you are, 6 months with a listing, do the math. And then these people, in most cases, they gotta go. They want to move on. And so therefore, making an offer to stop the bleeding leads to really phenomenal opportunities for the investor. Relisted properties, we see that all the time. I've seen properties, within 6 months be listed by 2 or 3 real estate agents. Seller thinks that it's the real estate agent that is not doing a good job at selling the property, not understanding the market. And those are great opportunities for you to come in and finally create, like I said, a solution where you're able to move on that deal. Vacant homes obviously goes back to the whole carrying cost, and the people carrying 2 mortgages, or like I mentioned, they are going through whatever life situation. No one wants to carry a vacant home, month after month. So those absolutely present really phenomenal opportunities for investors. So you got to look out for that. And then, of course, seller fatigue, like I mentioned earlier, right? Like it's month after month. Sometimes I've seen these properties where they're dragging their feet for 2 years on this thing. They can't afford it. They're hiring attorneys. They're trying to file bankruptcy. They try to do a loan modification. They try to do God knows, right? Forbearances, short sales, and nothing is hitting, right? Because they don't have the right people giving them the right guidance to finally, conclude this chapter in their life. And so they get tired. And I have a lot of folks that just throw their hands up and they said, I've tried everything and I no longer want to do anything else. The bank can just have it. Well, those are great opportunities to come in there with confidence, to make an offer on those particular properties, and work with a company like Asset Resolution that has the pathways to helping not only the sellers but also real estate investors to be able to actually execute on those deals. Hence, distress deals decoded. We decode these things, right? And so that's basically what it looks like. Today's canceled contract may be tomorrow's distress deal. So with that, guys, I don't know if you guys want to add anything else, but we're ready to wrap this one up. Any more from you guys?
I do have one other thing. If you folks out there are wondering, well, where do I find these, right? I mean, we talked about MLS. One of the other benefits of being a member of our community, which Juan's going to talk about in a minute, is access to foreclosure.com data at a 25% discount. Cheaper than you can get it on the street. It's great information. We've known those guys for a long, long time. Pre-foreclosures, bankruptcy opportunities, tax liens. Great place to start finding these things and the current one. So I encourage everybody to consider that as well. Thanks for that, Juan.
Absolutely. No, appreciate that for that shameless plug. I love it. So look, guys, we're gonna wrap this one up. We're not predicting a crash, right? But we are seeing pressure being built, and pressure always creates opportunities for professionals who understand how to navigate through these times. And so, here at Asset Resolution, if you are an agent, if you're an investor, and you're starting to see a lot of those deals fall apart, sellers getting stuck, deals, dropping at the closing table, maybe even situations that are very, very complicated. You don't really know how to navigate through it. Don't run away from those. Bring that to our community, right? Where we're able to go ahead and help you analyze, structure solutions, connect you with buyers and investors, and turn that difficult situation into a successful outcome. So again, I appreciate all of you watching here at this channel, Deals, Distress Deals Decoded, joined by our group here, ARA, Asset Resolution Community. We would like for you to follow us. We'd like for you guys to subscribe, reach out to us with those deals so we can plug you in, we can help you with those opportunities and get you paid and or get these sellers out of these hard situations. So please give us a like, comment, subscribe, share this with people that may need these types of solutions. And don't forget to join our community and where we are able to communicate and connect with you guys directly. So again, thank you so much for watching. We'll see each other next week. Thank you, everyone.